folks. This is David McKnight. Welcome to the Power of Zero show. You know me as the best-selling author of The Power of Zero, Look Before You Lerp, The Volatility Shield, and most recently, Tax-Free Income for Life. If you're looking for someone to help you navigate all the pitfalls that stand between you and the 0% tax bracket, why not head over to davidmcknight.com? We can hook you up with one of our elite Power of Zero advisors who's been trained, vetted, qualified personally by me. And if you're an advisor looking to reorient your practice to the Power of Zero worldview, head over to powerofzero.com. We'd be happy to have a chat with you. Of course, I always appreciate a follow on Twitter at McKnight and Co. That's at McKnight and Co. Today, we are going to be talking about the estate plan, the estate tax plan that Bernie Sanders is proposing. Now, Bernie Sanders is the chair of the Finance Committee in the Senate. That's not the official name for it. Anyway, he's the person that's heading up any proposals vis-a-vis estate taxes. Okay, so and his estate tax proposal is deviating to some extent from what President Biden has campaigned on and what he has put forth as his own proposal. So what we're going to do today is we're going to talk about what Bernie Sanders' proposal is. We're going to talk about how that contrasts with President Biden's proposal, and we're going to talk about whether it's something that you need to worry about or not. So for starters, let's talk about what Joe Biden's plan is. Joe Biden's plan basically says that the estate tax exemption, which is currently $11.7 million, that means that you can pass on $11.7 million as a single person to the next generation without any estate tax, or double that basically, $23.4 million for a married couple. You can pass that much money on to the next generation without incurring estate tax. That's where it stands currently. He wants to revert back to what it was back in 2009. What was it in 2009? It was $3.5 million for an individual, and it was $7 million for a married couple. In other words, if you're a married couple, you would be able to pass on $7 million to the next generation before you owe $1 in estate tax. So so there's two components of this, really. There's what the estate tax exemption is, which I just explained, but there's also anything above and beyond that estate tax exemption that gets passed on to the next generation is subject to a tax. And under Biden's plan, that 40% estate tax would stay in place, and it would go as high as 45%. However, Bernie Sanders' plan, in contrast to Joe Biden, while Bernie Sanders agrees with the estate tax exemption that it should be $3.5 million for a single and $7 million for a married couple, he wants to start with a higher tax rate. He wants to start at 45%, and he wants there to be some progressivity as your net worth goes up. So let's talk about what that progressivity looks like. So essentially what we're looking at here is, according to this article, it says Sanders' estate tax plan would exempt the first $3.5 million of an individual's estate from the tax and $7 million for joint filers. But this is where it gets very, very interesting. Estates value between $3.5 million and $10 million would be taxed at 45%. Those between 10 and 50 million at 50%. Those between 50 million and 1 billion at 55%. And then anyone over 1 billion would have to give away 65% of their net worth to the federal government. By the way, when Bernie Sanders ran for president, he actually put forth an estate tax proposal that had the highest tax bracket for those making more, or those passing on more than $1 billion, at 77%. So he's actually toned it down a little bit in an effort to be, I don't know, a little bit more, maybe bipartisan or what have you. But anyway, so that's his tax plan, okay? And he's calling this proposal for the 99.5%. Why does he call it for the 99.5%? Because he says that for 99.5% of Americans, they would not see their taxes go up by 1 penny under this plan. So in other words, he is targeting the top 0.5% of all Americans, okay? He goes on to say, unbelievably, the United States today has more income and wealth inequality than almost any major country on earth. This inequality has only deepened with the economic crisis brought on by COVID and by a tax system that allows for billionaires to pay less in taxes than working people across the country. Okay, so there's a couple of things that I want to discuss vis-a-vis this current tax proposal. Number one is the types of revenue that this is going to generate. Now, you have to keep in mind that the wealthy are already paying a lot in tax. In fact, it's going to be there's 657 billionaires in America with a combined net worth of 4.26 trillion, and they will end up owing $2.7 trillion in estate tax. Here's the thing, all of that money, that $2.7 trillion in estate tax, is already baked in to our country's current fiscal trajectory. What does that mean? That means that the debt that we're in, okay, and the money that we plan on receiving over time already accounts for the $2.7 trillion in estate taxes that the IRS is going to be bringing in under current tax law. So what Bernie Sanders' proposal is doing is it's generating an additional $430 billion of revenue, okay? So the question naturally becomes, if the 2.7 trillion is already accounted for, what is that for? In other words, it's already accounted for in the spending that has been proposed in his current law. What's going to become of that $430 billion that will result from this legislation potentially going through? By the way, is this legislation going through? If it does, it'll have to go through budget reconciliation because there aren't very many Republicans, if any, who would buy off on this. But that $430 billion is not earmarked to pay down the debt. It's not earmarked to shore up Social Security, Medicare, or Medicaid. It's not earmarked to shore up the country's fiscal condition. It's earmarked to pay for additional proposals, additional initiatives that really are above and beyond what our current fiscal condition already accounts for. So what are we talking about? We're talking about an infrastructure package, okay? Infrastructure package between $2 and $3 trillion in expense. This is only going to generate an additional $430 billion over the course of the next 10 years. So this is what I like to call rearranging the deck chairs on the Titanic. It's really sticking it to the top 0.5%, but it's not really changing the overall trajectory of our country. So it would be nice if, as I've always said, we have to either dramatically increase taxes, dramatically lower spending, or some combination of the two. It would be nice if every once in a while an increase in taxes went to pay down a debt, or to shore up a program that is driving all of the debt for our country's balance sheet over time. So that's the type of revenue this is going to generate. Let me give you a specific real life example of what this might mean for our nation's billionaires. And by the way, if you want to see this graphic, you can do so on the YouTube version of our podcast, where all of these graphs and charts can be seen on all of our podcasts, by the way. So Jeff Bezos is currently on track to pay $71.23 billion. Under the new tax, he'd have to pony up about $115 trillion. Elon Musk is on track for $64 billion of estate tax. He's on track for $105 billion if Bernie Sanders gets his way. Bill Gates is currently on track to pay $50 billion, and under the new scenario, $82 billion. Mark Zuckerberg, Warren Buffett, Larry Ellison, Larry Page, Sergey Brin all see sort of commensurate increases in their tax rates. So, so what does this mean for you? Okay, what does this mean for you? Are you exempt from estate tax? Well, this is what I've long said about estate tax. It comes down to this. It's not about what your estate is worth today. It's what your estate is worth when you die, okay? And so a lot of this involves being able to project out what your estate is worth between now and when you die, accounting for all of the spending and gifting that you'll likely do along the way. So could you have an estate problem in the future but not have one now, or vice versa? Absolutely. Okay, so this much I've known. The people who are really, really good savers scrimp and scrape and save their entire lives, and then they get to retirement, and then they, guess what? They don't automatically adopt a rock star lifestyle. They tend to persist in their, in their parsimonious ways. They tend to continue to be low spenders and good savers, and they tend to not automatically convert themselves into, some sort of prodigal, right? So this much I can tell you: if you have a sizable estate by the time you retire, there's a good chance your estate, notwithstanding your spending, could continue to grow and compound over time. And this is where it's important to say, okay, how can I account for the spending and the gifting and the growth of my estate over time? How can I get an accurate depiction of what my estate will be when I'm most likely to die? And what do we think the estate tax exemption will be 25, 30 years from now? Will it be what it is today? Will it be what Bernie Sanders is proposing? Or, hey, 30 years from now, we might be in an increasingly precarious financial position, in which case that estate tax exemption might be even lower. So once again, when a country is going insolvent, the US government looks in all quarters to raise revenue to keep themselves solvent. So the important thing is to say, okay, even though I may not think I have an estate tax problem now, I may not have an estate that's greater than 7 million as a married couple or 3.5 million as a single person. The real question is, what will my estate be worth 20 to 30 years from now when I actually die and I have to come face to face with a potential estate tax? And of course, if you are looking for someone to help you understand whether you have an estate tax problem, we're happy to help. Head over to davidmcknight.com. We'll hook you up with someone who's been trained, vetted, qualified personally by me, and we'll take a look at your situation and see if this is something that you even need to worry about. Now, keep in mind that in order to address estate planning issues, okay, there are ways to do it. There are ways to mitigate the threat of estate tax, but you can't do it at the 11th hour. You have to have a long runway. It involves shifting money. It involves gifting money. It involves, in some cases, loaning money into a trust. That's what we call an intentionally effective grantor trust, where you incorporate a strategy called private loan-based split dollar, which allows you to grow your money outside your estate, but recall your principal should you end up needing it somewhere down the road. I may do a podcast just on that alone. I haven't really had to address these types of things for the last 10 years because the estate tax exemption has been so big. But now that the specter of a much lower estate tax exemption is coming into play, we're going to have to start addressing ways to mitigate tax rate risk when we have 20 to 30 years of runway to be able to get dollars repositioned into the right types of accounts that are outside your estate. So once again, if you want some help, we're happy to take a look at your situation and see what we would do were we in your shoes, and lay out a roadmap and show you the mathematical benefit. In other words, if you keep on doing exactly what you're doing and you don't change a thing, how much money gets passed on to the next generation, versus if you implement all of the strategies that we suggest that you do, how much more money could be passed on to your heirs if you were to adopt that approach. All right, so that's it for today, folks. Once again, if you need help with this, davidmcknight.com. If you're an advisor who wants to start adopting these types of principles, head over to powerofzero.com. I would love a follow on Twitter @McKnight & Co. You can follow me on Instagram as well. That's David C. McKnight. That's David C. McKnight. If you have not had a chance to review The Power of Zero, Look Before You Lerp, The Volatility Shield, or Tax-Free Income for Life, I would love it if you just headed over to Amazon and just put down a fair and honest review. Once again, if you are not watching the podcast on YouTube, if you watch the podcast on YouTube, you're going to be able to see all of the visual aids that I'm showing during the podcast. If you're listening to the podcast, you're maybe not going to, through the usual channels, you're not maybe going to be able to. Well, you're definitely not going to be able to see the visuals, but you're not going to have a chance to really visualize what I'm talking about. So whatever you're most comfortable doing, but if you do want to see the visuals, know that if you head on over to YouTube, you'll be able to see the video of me giving the podcast as well as the visuals that go along with what I'm talking about on any given subject. And once again, subscribe. I really appreciate you being with me this week, another consecutive week. That's 129 weeks in a row. And I look forward to chatting with you same time next week. Talk to you soon.